Welcome back to your weekly real estate market update with Pries Capital Real Estate. I'm Jason Pries, founder of Pries Capital Investment Research. Each week, we cut through the noise and the headlines to bring you the real story behind the Myrtle Beach housing market. Our goal is simple: give you clear, data-driven insights you can trust. Whether you're buying your first home, preparing to sell, or guiding clients as a realtor. So let's dive in and take a look at what's really happening in the market right now. Let's step back and look at the big picture. The Myrtle Beach single-family housing market is showing more signs of shifting into buyer-friendly territory. Elevated interest rates are still weighing on affordability and keeping some buyers on the sidelines, but recently we've seen rates begin to stabilize and even dip slightly, which is a positive sign. Now, when we look at the sales side of the equation, activity has slowed compared to recent years. Year over year, sales volume was down about 3.4% in the final week of September. But if we smooth out the week-to-week noise and take a broader 3-month view, sales are actually up a modest 7.4% compared to the same period last year. So the short term looks soft, but the trend line shows a little improvement. On the inventory side, this is where things get interesting. The number of homes on the market has dropped back toward 2024 levels after breaking out early in 2025. Right now, there are 989 single-family homes actively listed. That's close to the 6-month supply mark, which traditionally defines a buyer's market. In other words, choices are improving, leverage is tilting, and buyers are gaining some ground. Alright, with that context set, let's dig into the data and see what the weekly numbers are telling us. Now let's talk about new listings, because this is where the story gets pretty interesting. Over the past year, the number of new listings in Myrtle Beach has dropped off noticeably. In fact, our data shows an 11.2% decrease compared to last year. That slowdown means the market is starting to look a little more out of balance, with fewer fresh options hitting the market for buyers to choose from. To put it in perspective, active listings have slipped from about 1,067 homes back in early April to just 953 this week in September. So, what does this mean? Well, supply is underperforming demand, which limits buyer choices and could actually stir up more competition as we move into the next few months. At the same time, sellers are dealing with a tougher environment, with fewer buyers to go around. Pricing strategies matter more than ever. Alright, let's move on and see how this connects with pricing adjustment trends. Let's talk about price cuts, because this is one of the most telling signals in today's market. In Myrtle Beach, more than half of all listings, about 50.4%, have reduced their asking price. That's up from 46% at this time last year. Sellers are clearly adjusting expectations as demand softens and homes sit on the market longer. What does this mean for you? For sellers, it's a sign you'll need to price competitively if you want serious offers. For buyers, it means negotiating power is shifting in your favor. You have more opportunities to get into a home at a better value than the original list price. This trend confirms that the market is moving towards a buyer-friendly environment, which they haven't seen in years. Now let's turn to prices. The overall median pending price in the Myrtle Beach region ticked up 1.5% year over year, reaching $429,900 in September. But when we zoom in on single-family homes, the story is a little different. Back in June, the median pending price was $449,000, meaning we've seen some downward pressure since then. On the chart, you'll notice weekly fluctuations, but if you smooth it out on a 3-month delta, the broader trend shows prices stabilizing rather than falling off a cliff. So what does this tell us? The market is shifting toward a more buyer-friendly environment. Inventory levels have inched down, new listings remain light, and sales activity has slowed, leaving homes on the market longer. That's why we're seeing more price cuts, as sellers adjust expectations and buyers gain leverage in negotiations. Even with these adjustments, though, the median price hasn't collapsed. Year-over-year growth is flat to slightly positive. This week's data paints a clear picture. Buyers are gaining opportunities as inventory builds and mortgage rates ease slightly. For sellers, success comes down to strategy, pricing competitively, offering smart incentives, and having patience. The balance is shifting, and those who adapt will stay ahead in today's market. Thanks for watching this week's real estate market update. If you're navigating this ever-changing landscape and want to make smart, confident decisions, we're here to help. Visit us at Pries Capital Real Estate in Myrtle Beach, or reach out directly for a personalized consultation. At Pries Capital, we cut through the noise to deliver what truly matters: real data, real insight, and real guidance you can trust. Want to stay one step ahead of the market? Sign up for your free Pries Capital Real Estate research account at priescapitalrealestate.com to access weekly, hyperlocal data and expert insights tailored to your neighborhood. Thanks again for tuning in, and we'll see you next time.